Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks, where two Zacks strategists each talk about their favorite stock. Mine is going to be NVIDIA. All right, so we'll take a look at the price chart first. Here we are, up 20% after earnings. Remember, we were hanging out at 950, and remember I said buy under 800. We did it with a leveraged ETF, NVDL. I'll show you that shortly. And I don't think it's going to fill this gap back to 950. We almost filled the gap back to 1065. So what we want to talk about is I wrote an article over the weekend, and then Computex hit. So that's the big conference in Taipei, Taiwan. Jensen's keynote was off the charts. I'll show you what one analyst said. Alex, he says, Wall Street does not understand what's coming. He said, NVIDIA just changed everything we know about AI and Computex. And I said, amen. I feel like I've been saying that every year for the past 2 quarters. So that's that's what's going on here. So if you go to the NVIDIA newsroom, just to Google NVIDIA newsroom, you can find Computex, and you can look at the keynote, you can look at the slides. I downloaded the slides. The only thing I don't like about them is the font they use is kind of fuzzy, but it is what it is. Everything else is great. So let's look at a few of the slides. I'm going to go to number 10. And you could also watch Jensen's keynote too. So, I actually want to show you this one first. Slide 6 is really interesting because it graphically gets across the idea of accelerated computing is about speed and lower energy costs. And this just shows it. When you stack GPUs together with accelerated CPUs, it just creates incredible savings for enterprises, even though they're having to buy more of them in the long run. So I want to show you slide 10. So I've always talked about how Jensen evangelizes with CUDA. CUDA is Compute Unified Device Architecture. It's a software that integrates everything, and he gets developers on board, and they never want to leave because they create in that environment, and that just creates a virtuous spiral that he loves to mention. So one more slide I want to show you is 26. There's a ton of good stuff in here, though. There's 60 slides, so you can watch Jensen for 2 hours or take a break at an hour and go look at some of the slides yourself. But there's just a ton of information in here. And, and Jensen's such a good teacher too. It's not just that he brings us new products and new ways of explaining things, but he's just really good at explaining things. So I used to show one of their graphics from 2016 was how NVIDIA, GPU, DGX, CUDA-driven accelerated computing was reinventing Moore's Law, because Moore's Law was sort of leveling off. And if this doesn't get it across, I don't know what does. Red line down here is Moore's Law now, and the speed, the acceleration that's being achieved with stacking these GPUs together into giant GPUs for corporations with with massive processing speed and connectors, connectors that can do 10 terabytes a second is incredible. So that's what Jensen's doing. Let's look at the estimates real quick, and just so here is how things went up after earnings on May 22nd. Here's sales. Current year, 116 billion now. I thought next year, here we are at 142 billion. I thought this would go to 150 billion after this earnings. There is one guy at 161 billion, but this will be a year from now. This number will be 200 billion. And so we're in fiscal year 25. It began in February. And earnings, he just keeps turning the screws positive there with the margin leverage. And a lot of analysts think there's, potentially $50 EPS earning power here. So when people can't grasp what NVIDIA is doing, exactly what accelerated computing is and why it makes a difference and why NVIDIA can keep going higher. Bank of America just raised their price target to 1,400 or to 1,500 after Computex. So I'll show you the article that I wrote. This will publish tomorrow. I wrote this Sunday afternoon, and with some comments about just some preliminary comments because I knew an analyst who was there, Daniel Newman, Futurum Group. He showed Jensen's ROI calculator that I showed you, but just talking about the speed, I said, NVIDIA's not going down to back to 950, and I raised my price target to 1400 after earnings. Bank of America just went to 1500 after Computex here, so I'm no longer the high target on the street, be that as it may. And check out the Computex slide deck and Jensen's keynote. Now, Shiraz with his top pick for the week.
Thanks, Cooker. The stock I have is Goldman Sachs. I have put together a couple of slides you could see here. This is a 1-year performance of Goldman relative to JP Morgan. That's the purple line just above Goldman. And then the Zacks finance sector, the green line is the S&P 500, and the orange is Morgan Stanley. Goldman and Morgan Stanley always get mentioned in the same breath, so they're like the top competitors, plus JP Morgan. Though JP Morgan, you know this already, but JP Morgan is more of the full service, the financial conglomerate, the money center, while Goldman and Morgan Stanley are the pure play bankers. So this is the 1-year performance. As you could see, Goldman is doing pretty well. This is a 3-year performance. And you can see here in this relatively longer span, Goldman and JP Morgan lag the market. And then you have financials, and Morgan Stanley in all of these is at the bottom. So why I like Goldman? Goldman has been trying to grow out of its investment banking and fixed income currencies, commodities, trading core into the broader consumer and household banking. That foray outside of its core strength really has been problematic for the company, and it's getting out of that now. I refer to it as getting out of the non-core distractions. It is getting out of the non-core distractions. I'm referring to Marcus. I'm referring to the Apple Card and a host of other initiatives that they had that distracted management from the core functions. So it's getting back on track. Everybody's happy with that. Asset management is the only additional area that management is sharing with the street that will remain part of the added to the core. And this was one of the dividing factors, the differentiating factors between Goldman and Morgan Stanley over the last many years. Morgan Stanley, as you know, went the asset management side wholeheartedly, and the market really liked that. Asset management is less volatile. Those assets are more sticky, and that adds visibility to its earnings power. And for a very long time, Morgan Stanley shone when the market really hung up on Goldman. So refocus on the core investment banking, trading, and asset management business, and that's the reason why the market is giving the stock another look. We have been hearing about green shoots with respect to the core business. On the earnings calls, both in the Q1 earnings releases, also in the prior ones, management teams have been talking about deal pipelines and things like that. So there is greater evidence now that the green shoots are for real. And beyond the green shoots and the pipeline, the macro backdrop is a lot more favorable and supportive now. And what I'm referring to is is about the Fed, about the outlook for the economy. Uh, the soft landing narrative is front and center now. The worries about the economy and all that has gotten into the back into the background. There's still some questions about when the Fed will start easing, but there's no question that the next Fed move, I'm not saying like next month or the next meeting, but the next move will be towards the easing side, whether that's after or before the elections, but that's the consensus view. So valuation, I'm here plotting 5 years Goldman Sachs versus the S&P 500. Goldman is trading at 12 times right now. At the bottom here is the summary. You could stop the video to take a closer look at it. So current is 12 times. Over the last 5 years, the high has been 17.3 times, low is 5.5 times, and the median is 9.65, so 9.7 times. Here I'm showing Goldman as a percentage of the S&P 500 multiple, and this is the forward 12-month multiple, by the way. So it's currently trading at 58%, 0.58. Over the last 5 years, it has been as high as 86% and as low as 30%, with a median of 50%. So it's practically trading at the 5-year median. Bank analysts and investors typically prefer the book value multiple, particularly the tangible book, and this is what that is showing again on a 5-year basis, 1.44 times right now. As high as being 1.6, low as being 63, 0.63, and 1.1. So what I'm trying to show is that through these valuation looks, the stock isn't as dirt cheap as it was a year or so back, but it's hardly expensive. And when you look at the earnings outlook, and what this is showing is, this is the price consensus and surprise chart. This is the most interesting and useful fundamental charts that we share with you on Zacks.com. And the black line is the price, obviously, and then the dotted lines represent the annual earnings. And in here, this light brown, as you could see, that's 2026. The light blue here, this is 2025, and the dark blue here, this is 2024. And you could see here that 2024 is going up, 2025 is going up, and there is an upward trajectory to the 2026 outlook as well. And this is at a time, keep in mind, when we are only talking about green shoots. There's not a full-fledged onset of the core investment banking activities. So the outlook is improving. Obviously, the very easy gains in the stocks have been made. But I strongly feel that Goldman is very well positioned for this coming period of increased deal flow and investment banking and IPOs and other equity and debt capital market activities, plus trading. Goldman, as you know, has been a trading powerhouse, particularly fixed income currencies and commodities, what they call as FIC, and then the growing asset management business. So Goldman is an excellent way to play this improving outlook for the market, and don't feel that you have missed the boat on this investment banking leader. If you have a longer holding horizon, you can't go wrong by buying into and initiating a position with Goldman. With that, that's the end of it, and we'll see you guys next week.